The BTP-Bund spread is a measure of the difference in yield between Italian government bonds, BTPs, and German government bonds, Bunds. It reflects the perceived risk of investing in Italy compared to Germany, which is considered the safest and most stable country in the Eurozone. The higher the spread, the more investors demand to lend money to Italy, and the more it costs for the Italian government to finance its debt. The BTP-Bund spread has changed over time depending on various economic and political factors that affect Italy and Germany, as well as the Eurozone as a whole. Some of these factors include the global financial crisis of 2008 to 2009, which triggered a sovereign debt crisis in Europe and increased the risk of default for some countries, especially those with high public debt and fiscal deficits. Italy was one of these countries, and its spread reached a peak of over 500 basis points in November. The European Central Bank's (ECB) interventions to support the Eurozone economy and bond markets, such as the long-term refinancing operations, LTROs, the outright monetary transactions, OMTs, and the Public Sector Purchase Program, PSPP. These measures helped to lower the borrowing costs for Italy and other countries, and reduce the spread to below 100 basis points by March. The political instability and uncertainty in Italy, which often resulted from coalition governments, populist movements, constitutional reforms, budget disputes, and elections. These events increased the risk of policy changes or fiscal slippages that could undermine Italy's credibility and solvency. For example, the spread widened to over 300 basis points in May 2018, when a populist coalition of the Five-Star Movement and the League formed a government and proposed an expansionary budget that clashed with the EU fiscal rules. The coronavirus pandemic of 2020 to 2021, which caused a severe economic and social shock for Italy and other countries, and required unprecedented fiscal and monetary stimulus to cope with its effects. The spread initially spiked to over 300 basis points in March 2020, when Italy became one of the worst-hit countries by the virus and imposed a strict lockdown. However, it then narrowed to below 100 basis points by December 2020, thanks to the ECB's Pandemic Emergency Purchase Program, PPP, which increased its bond buying to support the markets, and the EU's Next Generation Recovery Fund, which allocated €209 billion to Italy as grants and loans.